What's going on, you guys? It's Royce Jacob. Welcome back to the channel, and in this video I want to talk to you guys about why I believe the current stock market is full of shiny objects. I'll do my best to explain to you guys what that means, and I'll also talk to you guys about how I'm using this information as well as some historical data to trade some of these shiny objects. Alright, so over the course of this video we will take a look at a few charts that I have determined to be shiny objects. Now you guys have to understand that when I say shiny objects, it doesn't mean I don't like this stock, it's a bad stock, this is a worthless stock that's running up. It just means that this stock is causing so much hype and drawing so much attention that it's drawing a lot of new money, a lot of new investors to be interested in it, and causing a hype cycle. So a lot of what we're going to be talking about today is that hype cycle, that kind of bubble cycle, and we'll look at a few charts. So we have Tortoise Acquisition Corp, ticker symbol SHLL here in front of us. We will kick it off with that. This in my mind is as well as a lot of the EV sector right now. So Workhorse as well is kind of the current definition. This is in this current market that we're in as of right now, July 4th. Happy 4th of July, by the way. As of today and this past week and the past few weeks is one of the sectors in this current market that I believe is the epitome of a shiny object. Okay, it's drawing so much attention, so much investors are excited about this space, which is flooding money into this sector. Okay, so we'll take a look at these guys. We will take a look at the biotech sector that we covered. We've been following this for months now. It is this past week alone, it hasn't done too well, but it's definitely still month over month over the past few months, definitely. It's done extremely well. It's still up a lot. So we'll take a look at Moderna, which was kind of the OG of the COVID vaccine sector. We saw like just a lot of volatility. That's another thing I want to talk about as well in this video, is just the volatility and how I'm managing my expectations, understanding that a lot of these stocks are going to see volatility. Okay, nothing just goes up forever, but we will look at Moderna. And when we're looking at all these charts, the important thing that I kind of want to establish, honestly, I'm just kind of going off the cuff here and letting you guys, I had an idea of what stocks I wanted to cover in my mind, like specifically, but we're all here together, and I just want us to look for patterns together. Okay, so when you're looking at all these charts, and obviously the thing they all have in common is that they did follow a hype cycle. Okay, so they draw a lot of investor sentiment, a lot of excitement around their stock, which caused a lot of new money and new investors to flood into the stock, causing it to skyrocket. Okay, so we'll just look for patterns, and again, patterns, ways these charts repeat themselves, so we can apply that to some of these younger stocks like SHLL, Hyllion, whatever, Workhorse. So we'll look at Moderna, we'll look at Sorrento, which is kind of in the middle of what I call like the two-wave theory. That if you've watched the channel, you would know what that is. But I do have this two-wave theory. You see a move up, you see a crash, like bubble up over the course of like a day or two, crash back down, capitulate, which is where it goes flat, and then you'll see a second wave. So I do believe that applies to many stocks, especially in this current market. But again, we're just looking for these psychological patterns, okay, these FOMO patterns that lead to these hype cycles and bubbles. All right, and then we will look at Tilray. This is what I consider to be the textbook example of a bubble and what a hype cycle can do in full effect, and like the full time frame. You can look at the full bubble cycle. All right, so we will look at this, but I actually do want to we always have to establish a fundamental baseline before looking at the technicals on this channel, at least. So I do want to cover IPOs. All right, so if you guys are familiar with IPOs, Hyllion is IPOing, so initial public offering. They're offering public shares of their company to the stock market through a merger with Tortoise Acquisition Corp, which is the same thing Nikola just did a little while ago with VTIQ. So that is a very hot way to go public right now, just merging with an already public company, and that's awesome. But I do want to explain to you guys how the IPO market right now definitely has some flaws, and I don't want to say it's good or bad. Again, we could be going through a paradigm shift, which I have been saying a lot lately in these current markets. So again, not a good or bad thing, but I want you guys to be aware of this information so you can do with it what you please. All right, so we're going to read through these real quick. Tech IPOs are being badly mispriced as Lemonade and Agora double in market debuts. All right, so Lemonade, I will make a video on Lemonade in the future. They just IPO'd, doubled in a single day. Agora did as well. So that's just these IPOing stocks that are doubling in a single day. That is the definition in my mind of that is a textbook shiny object. So I will cover Lemonade in future videos, maybe Agora as well. Let me know if you guys want to see that. But again, I just want to kind of preface the landscape of IPOs with you guys. Okay, so key points: Lemonade, an insurance tech company, soared 139% on their debut on Thursday to $70. The offering comes a week after Chinese software company Agora jumped more than 150% in its first day of trading. They're ignoring demand when they price on purpose, said venture capitalist Bill Gurley of Benchmark. All right, so Benchmark Capital, is a huge venture capital fund. Bill Gurley is one of the heads of that fund, so he understands its landscape almost better than anyone on the planet. So what he says and his take on this holds a lot of weight in my mind. All right, so we will just read this part right here, and then we'll call this article there. Technology is moving at warp speed during the coronavirus pandemic, but the IPO process is stuck in place. For a second straight week, a tech company has more than doubled in value upon its stock market debut. Last week, it was Chinese cloud software developer Agora, which surged 150% in its first day of trading on the Nasdaq. And on Thursday, an insurance tech company, Lemonade, jumped 140%. Tech IPOs have long been criticized for a process that lets investment bankers hand over underpriced stock to large public money managers, who often enjoy immediate and massive pops before ordinary investors are able to participate. Meanwhile, the issuing company ends up raising far less money than it could. Over the past 4 months, with face-to-face meetings off the table because of, again, the pandemic, IPO roadshows have gone virtual. Management teams, with the help of bankers, are now selling their story over Zoom, rather than spending 2 weeks traveling the money hubs of New York, Boston, Baltimore, and San Francisco. While they may be saving money on travel, they're still leaving piles of cash on the table. Lemonade sold 11 million shares at $29 apiece, bringing in just over $300 million and giving new investors the $44 million difference based on the closing price of $70. That's a big deal for a company that had cash equivalents of about $567 million before the IPO. Okay, so that's a huge raise in terms of, again, they had $567 million of cash equivalents before the IPO. They immediately raised $300 million. So I'll keep reading here because I just want to get through this. They are ignoring demand when they price on purpose, said venture capitalist Bill Gurley of Benchmark in a text message. This problem is systemic because the system is broken, or systematic, because the system is broken. Gurley, who has been among the loudest IPO skeptics, posted a similarly themed tweet after Agora's IPO, expressing amazement that there is financial exercise on this planet involving hundreds of millions of dollars where it's okay to not even get 50% of the actual end result. So, again, because it doubled in a single day, that's why he's saying it's not even it's okay to not even get 50% of the actual results. All right, so we will look at this right here. So this is actually a response to that article by Anthony Pompliano. This is in his newsletter, the Pomp Letter. This is an amazing newsletter if you guys are interested at all. But his response, just kind of his thesis on this, was very well said, and I feel like it's better than I could have said it just right off the bat. So I will read this for you guys to sum this up. In each of these scenarios, investment bankers and their clients more than doubled their money in a matter of minutes, yet the companies left hundreds of millions of dollars on the table. Seems like a one-sided trade, right? That is because it is. The success of an IPO should not be determined by how much the stock price appreciates once it is liquid, but rather how much capital a business can raise without seeing a substantial drop in share price on the stock is trading. Okay, so to sum this up, what's basically happening right now is the investors, the initial shareholders of these companies that are going public, are just selling the stock to get rich now because they're capitalizing on this new retail trading movement when the markets are on absolute fire. All right, so I can't say I blame them. Obviously, they understand how the economy is in a really bad place right now, and they're seeing the markets are on fire. They want to get these shares off the table, off their hands, and cash in pocket, all right? They'd rather have cash right now than their own shares, even if they're leaving money for their company on the table. So I just want you guys to understand that when you're dealing with these IPOs, again, like Hyllion, these guys are Tortoise Acquisition Corp, which is merging with Hyllion, and again, this is technically Hyllion's IPO. You have to know that is what these companies and the leaders of these companies, Nicola specifically, that's what they're doing when they IPO. Okay, and again, it's hard to blame them if you were in their place. I mean, going public is such an appealing move, especially at this time when the markets are so hot and these shiny object stocks are hotter than ever. That's there's never been a better point in time for the leadership and early investors of these private companies to go public. All right, they're incentivized to go public, and like Bill Gurley said, it's because the system is broken. Just the structure of it is broken. All right, so again, we will take a look at a few of these charts. I'll just let you guys know what I'm seeing, and again, we'll all look for patterns together. All right, so two-wave theory. right here again. Just keep that in mind. This doesn't directly apply to everything, but it's just kind of a general baseline train of thought when you're looking at a lot of these bubbly charts, okay? So we saw the first wave. A lot of times when you see an initial move up, you will see a move down. Nothing goes up forever. That's just trading. That's a life 101. Nothing goes up forever. What goes up must come down, but it's obviously to what extent will it come down. So fell up. A lot of times you'll see, again, a correction. It goes sideways. Sideways movement is very bullish after an initial significant move up. So if you are see a pop up, correction down, sideways movement, a lot of times that will mean that means you will see a second significant move up. In Hyllion's case, obviously, as word continues to get out, that is also a catalyst in this. In a lot of this, news is a catalyst, but a lot of times you just have to look at the hype cycle, okay? So again, I still think Hyllion, Tortoise Acquisition Corp, Hyllion, whatever you want to call it, right now has a lot of room to grow, especially because the EV sector is so hot right now. Again, I don't want to get too deep into this and just rant on this, because I will make a video specifically on Hyllion, this merger, etc. in the future, so stay tuned for that. I also have to ask you guys, I just realized I forgot. If you do go on to gain value from this video, if you hold any of these stocks, if you think that there are shiny objects in this market, please give the video a like and subscribe to the channel if you are new around here and want to catch more trading and investment content like this. All right, so back to this. Yeah, again, I don't want to spend too much time on this. We're just looking for similarities in this chart, okay? So Hyllion, just to Tortoise Acquisition Corp, whatever, I do feel like they will see a pull. Okay, so this pullback right here is good. Like, it's not a bad idea to be buying around this level, considering that this is where they saw a pullback. This is where they gapped up. They corrected. They gapped up the beginning of last week and then closed the week down where they ended the previous Friday on. And that is a pretty good spot to enter if you want to enter. But just because there's so much hype around this EV sector right now, I definitely wouldn't be surprised to see this thing keep running. But always know, you guys, nothing goes straight up, straight down. I know that's a very obvious thing to say, but it's tough to see when you're seeing a runner like this to not get FOMO, and always be aware of FOMO. That's if there's one takeaway of this, it's be mindful of the fact that everyone gets FOMO. Even experienced traders, experienced investors will get FOMO. It's all about how you choose to navigate that emotion that is FOMO. Okay, so if you see something running up, you think it's too late to get in, and you think it's just going to keep going up, it won't. It's going to correct back down, and you will have a better buying opportunity. Okay, so Workhorse is a good example of this. Like, if you look at Workhorse on a daily, which is actually kind of more important in my mind, like, there's no chance in my mind. Great company. All that aside, there's no chance that Workhorse doesn't see a significant pullback after what is this, like 9 or 10 straight consecutive green days, parabolic green days. So Workhorse, again, has gone from like $2 to $20, 10x in the span of about a month. This is a textbook bubble. I think Workhorse is an awesome company doing awesome things, but this is exactly what a bubble looks like. This is unhealthy growth. This is unsustainable growth. And I think that it is inevitable when you see a 90-degree move like this. This has never happened in history and not popped at some point. Okay, so obviously, when will it pop? But this has gone on for a while. I would bet personally that Workhorse will have a significant correction fairly soon. But two-wave theory, you see a parabolic move, it'll crash back down, it'll capitulate, go sideways for a little bit. And when you see that sideways price action on a stock like Workhorse that saw a parabolic move, crashes back down, you get another buying opportunity. It'll probably go up and down a little bit right here, go sideways. And when it starts to go sideways, that is a green flag in my eyes. That is when I would pick up shares of the stock, because it is almost inevitable that it will see a second wave. All right, Moderna, you saw it here. So Moderna, again, when COVID initially came about, and Moderna announced they were working on a vaccine, boom, shares skyrocketed, went sideways, skyrocketed a little bit more. So you saw this initial pop up, initial come back down, just because, again, when you see, like, volatility enters the market in these stocks, okay? So it's important to just remember that. If you do, a lot of time, if you get in early, so if you got in this early, so like this is a good example. Like, if you get in now, I would almost recommend not trading this stock at all. Get a long-term position established and just set it and forget it. Just disregard the volatility and understand that it's going to be volatile. But if obviously the markets don't completely tank, I do think this over the coming 2 to 3 months will be significantly higher, like maybe like $100 or something over the course of the next few months. So don't get scared off. If you do want to establish a position in this, make sure it's long term. Don't try to trade it, because a lot of time if you do try to trade it, more experienced traders will take that money from you. So I feel like with a stock specifically like this, maybe even a Workhorse, I wouldn't buy a Workhorse right now, but so maybe try to trade it. But I mean, this looks like an appealing buy, obviously, because it corrected back. Workhorse corrects back, buy it, set it and forget it, disregard the volatility from that point on. And yeah, again, because when a lot of these are early, when you catch these early, and we will get to this with Tilray, because again, this is the epitome of a bubble in my mind. So we will look at that. We'll close it off with that, and just take that historical data into consideration. But you see Moderna spiked up, crashed back down, spiked back up, crazy amounts of volatility. And obviously this was very news driven, because they were trying to develop a stock, or they still are, but they were trying to develop a vaccine for COVID. And so you do see a lot of news driven volatility here. But over the course, and this is a strange example, because this is very news related and very news driven, but you still see like the hype, like how the hype cycles work. Okay, so you can see how the hype cycle worked here. You saw that move up, move down. This was a great entry point. Went back up, capitulated for a little bit, went sideways, fell back down, went back up, and then that's a really good sign, because obviously it broke this trend line right here as well. That's a great entry point. And then again, if you just held this over the past couple months, you'd have turned what, $20 into a high of $80. And obviously you probably wouldn't have played it perfectly, but if you sold right now at $60, you would have 3x your money. Okay, so we will just move on to Sorrento. This is an example of the two-wave theory that I believe is like playing out right in front of our eyes. Very bullish on Sorrento personally right now. So you see this parabolic move up, bubble, pop, come back down, capitulate, go sideways for a while, and then now it's starting its move back up. This is about as bullish a chart as it gets in my mind. Like, this looks so bullish, and I personally believe that if at the very least Sorrento will continue this upward trend, especially with COVID. I'm going to cover this in the Waves Weekly tomorrow. I just want to get this point across. But two-wave theory, boom, up, pop, down, capitulate, sideways, up, and this will probably see another significant breakout, just because that's how these things play out. I played a lot of bubbles in my day, the crypto bubble, the cannabis bubble, which we will look at right now, and then I'll just close this video out because I'm starting to rant. The crypto bubble, cannabis bubble, you always see this two-wave at some point. And it's hard for me to articulate. I'm sorry I'm not articulating it super well, but there are times when you just know this is going to play out. Specifically when, like, Workhorse is a great example. You just see this parabolic move up. You see the hockey stick. You see the 90-degree angle, and it's almost inevitable that this will pop. So, again, if you did hold Workhorse, probably a few months from now, a year from now, it will be higher than it is at this moment. But I cannot look at this and rightfully buy it, because I know almost for a fact in my mind, not investment advice, whatever, that this will pop. Okay, so we'll look at Tilray, and again, this is just to show you guys, like, you should go look at Tilray's chart for yourself on an hourly, on a daily, just to see how a hype cycle works, how when FOMO, the emotion that is FOMO enters the market, and when traders get FOMO and buy into that FOMO cycle, how the charts look. Okay, because it's all almost like, obviously history doesn't repeat itself, it does rhyme though. When you look at this chart, there are going to be similarities like that. You can see like 2 days up, 1 day down, 3 days up, 2 days down, etc., etc. So I don't actually want to like look at this chart super in depth, but you can see here, I remember I personally bought Tilray when it IPO'd back in I think it was the summer of 2018. But as you can see here, and this is a crazy chart, okay? So as you can see here, from August of 2018 at $25, which is around like $25 to $30 when I bought in, it ended up reaching a high of $300 in only a month. So this is the most FOMO, like almost up there with the Bitcoin bubble, or the Bitcoin bubble and the crypto bull run of 2017. This is about as much as you'll ever see a stock grow, okay? So 10x, and then it pops. So something to take away from this as well is, once a stock 10x's in the span of a month or two, kind of like Workhorse just did. So Workhorse is at $20. It was at less than $1, or I mean $2 about a month ago. So this looks a lot like Tilray in my mind. Workhorse might be very comparable to to Tilray, and then you'll see a complete drop back down to its first high. Okay, so it wouldn't be like, just for an example. Again, sorry guys, I'm just kind of going off the cuff here, just talking with you guys, having a conversation here. But if we look at Workhorse, I wouldn't be surprised at all to see Workhorse just on a daily come back down to, I don't know about $4, but definitely like $10. Okay, so I wouldn't be surprised at all to see a 50% correction. That's very common when you see bubbles, like a 50% retracement, and then it'll go sideways, maybe come up again, maybe try for another rally, but a lot of times come back down, like you saw here with Tilray. Okay, so yeah, again, crash back down, it'll pop back up if you happen to hold it here, and then if you happen to hold it through the bubble pop, and then you're down here and you get all discouraged, most of the time this will 90 to 99% happen. You'll see a little relief rally, a little bounce back up, but that is usually the end of the run. And always remember, you guys, this is all super subjective to the industry. Like, it all depends on how much momentum is currently behind the sector. Again, EV sector right now is seeing a lot of hype, a lot of momentum, and just know that it's you're not early. If you are trying to get into the EV sector now, you're early in the long game. But if you want to trade it over the coming months, you're not early, and it is very likely that we could see a bubble pop within the EV sector soon. Okay, so that's kind of just, I know this one got pretty rambly, but I just wanted to get this across my mind because I have been reading a lot about this, just kind of this IPOs, and I've been thinking about these shiny objects a lot, and about how I have been viewing them in my mind and trading them in real time a lot. So if you guys do want to know how I'm personally trading these, some of the stocks we're talking about today, you can check out my complete portfolio and daily newsletter down below. Exactly as it states, it's a complete breakdown of my entire portfolio. All call options, put options, stock positions as well, even cryptocurrencies if you're into that. And every trading day, I do send out a newsletter during market hours where I recap on the trades I made that day, new positions, old positions, my rationale behind why I made the trades that I did, as well as just my general thoughts on the market as a whole. Okay, so check that out if you're interested at all, and we'll call it there, guys. Please hit me up with a comment if I explain some of these things ridiculously and you want a little more clarification on it. And yeah, just if you're invested in any of these stocks, what you currently think about this very shiny object-driven market, retail investor-driven market. And yeah, just love talking shop with you guys. Love learning from you guys. Okay, so hit me up down there. And until next time, you guys, take action, make waves. Peace.